YouTube channel. Today I am going to talk in front of the camera, not while I'm walking and talking like I normally do, but just having a sitting down video where I can show some more graphs and get into it. Let me know if you like this style better than my other ones. I'm also have my tablet here to look at some stuff, and today we're going to talk about why Florida specifically is going to have to give financially. Something has to give, and we're going to go over why I think so, and I'm going to back it up with a little bit of data. And if you don't agree, let me know, and if you do, be more than happy to have a conversation with you. So I zoomed into the Cape Coral housing market. My family used to own property there, so I kind of am familiar with it. And we are now looking at a waterfront house on a canal, so it's not by the ocean. And my parents used to own one of those, and they sold it in 2009 or something, about 300 grand. And when we look at these houses, what I like about this housing market in Cape Coral is that when we go to the prices, you saw how after 2020, the house basically doubled in value. And as you can see that they've sold, just particular this house, they sold it on this green little dot, and then it just jumps up and does this crazy curve and basically doubled in value. And during that time, we were still in a low interest environment. So that means that money was cheap to borrow. And now we're starting to see that prices are going to have to come down because it's not that cheap to borrow that money anymore. So when these people sold their house or bought it, they had low interest rates. So it is very easy to borrow money for a house when there's low interest rates. But as soon as the interest rate goes up, it makes it really, really difficult to borrow that money. And as we can see here on this little graph here, so they've bought the house for $419,000. And today they're selling it for $870,000. And so that is basically doubling their money in three years. So 2 years, you basically double your money. And that is nuts. And this is not the only concept that I see, that Florida and housing market prices are so overvalued, because you cannot double your house value in 2 years. There's just no data for that. And I truly believe that if you're going to do that, there were probably a bunch of people that did that during COVID, when everybody kind of moved to Florida. But now with high interest rates, I just on CNBC today, they just said that the average hit as of today 7.22%. That's insane. So now when we go down to the calculation section, what I really like about Zillow is that you're going to have the house price, the down payment of $174,000 at 20%, and a fixed rate of 7.22, just like they did today. What do you guys think, before I put the calculator on the screen? What do you guys think is the monthly payment on this? So the monthly payment is $5,655, and that is if nothing else breaks. So let's go over here. There's no mortgage insurance because you bring in $180,000 in cash. Property tax is going to be $600 each month. Homeowners insurance $300 each month. So that's $3,600. So what I also read is that in Florida right now, if you have to renew, I think that's a very low one. So let's make it here $5,500, because it's been going up like crazy. And yeah, so if we do that, it jumps even up. So you're almost at $5,900 if you add that and increase the homeowners insurance a little bit, HOA fees and utilities. So now the big problem that I'm seeing is that $5,900 for a house in the 900,000 isn't too bad in an area where there's high-tech jobs and they pay a lot. But in this specific area, the wage growth is just small, and there's a bunch of retirees, and there's not that many tech jobs that pay you 6 figures plus. So now you're in a you're between a rock and a hard place, because what are you going to do? Are you going to buy, sell, or move to another area? Because paying $5,800 is just not worth it. And I mean, when it says the rent value here is $5,500, I hardly think that somebody's going to come along here and say, I'm going to rent this for $5,900, because there's just so much greater value out there than renting or buying something like this. And as we see here, the little graph is going down again. And so now we're starting to see that people that paid, that are going to buy a house now, because they're like, oh, what they tell you, oh, you got to buy a house now, are going to be, in a few years, are going to be pretty much in deep trouble. Because if the house values, interest rates rise, right? Interest rates go up, and home prices might go down later in a year or so, because it just keeps going up like that. And even a CEO on CNBC, I think of, what was it, Redfin or something, or Compass, said that 7% interest rate is going to be the new normal, and people are starting to accept that. And I do see that's going to be the case, that we're not going to see 3s and 2s anymore anytime soon, maybe in 10, 15, 20 years. But I think if you can get something below 5, that's really good. And everything else, like in the 6 and 7, it's just, it's going to fluctuate with the market a little bit. But yeah, let me know if you think this is crazy, if I'm delusional, or if you 100% agree. And let me know how you like this format.